its early light, what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight, and the ramparts we watched were so gallantly streaming, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Good morning. Good morning. Coming at you live this morning on this Wednesday. What is today? September 17th, I believe it is. I lost my notes here. Yep. There we go. You lose track of the days. Sometimes, especially the numbers. Anyway, so good morning. Good morning. Welcome to World HD. Today is FOMC rate decision day, and this is when the Fed meets with a focus on the future rate path. And in the past, the last couple of years, they've really been focused on inflation. Remember, the Fed has a dual mandate: maximum employment and price stability. And they've really been focused on the price stability. Why is that? Because as soon as President Trump left office, from Trump 1.0, inflation started to go through the roof. And we'll take a look at a chart of that here in a second. It really got out of control, right? And it's really, and it's not so much the rate, it's the compounding effect of this inflation that really hasn't hit. It's really having a hit on people. So that's why, there's been this increase in rates over that period of time. Okay. And to try to curb this inflation, right? That's the concept behind the Federal Reserve. The problem is, I don't believe that that's really the case. I think that that's what they want it to look like, but I think that they've been driving this inflation to weaken the households, to weaken the consumer. The thing is, we continue to get good consumer data coming out. The consumer stays strong. Somehow, some way, the consumer always seems to find a way. And remember, that's 60 to 75% of the U.S. economy, depending upon how you look at it. It's a lot. So again, consumption is a big part of our economy. That's why President Trump can leverage, our country, our productivity, our people, our ingenuity, our resources, all the things that we do here well around the world to get these tariff deals and these trade deals. Okay, so I think it's going to be changing, though. It's going to be a change here to the job side of things. The jobs is the only excuse they're going to have to play along with this narrative, right, of lower interest rates. So again, going from the price stability side, which hasn't been fixed, okay, we see, again, we look at inflation, right? Inflation, I know we've got a pretty, the crowd that's in here has been around, and listening to this for a long time, but I just want to make sure that we think about inflation in terms of at least three different types of inflation: asset, demand, and currency. So at the household level, we can see huge inflation, but other parts of inflation, and again, it's all how you look at it, but other parts of the inflation could be actually disinflationary or deflationary, right? So we want to keep that in mind, right? When we talk about inflation, you can't just cast a spell over everything and say inflation is low, inflation is high. And so that's what we're trying to break apart in here, right? So again, we're going to see this, I think, the shift in the narrative today. Okay, first off, they're probably going to cut 25 basis points. They probably don't want to rock the boat. I doubt they're going to do 50, even though President Trump was out calling for, I want big cuts, right? I mean, the word big, right? You might as well just say bigly, right? Let's do it bigly, right? So, the big, I haven't heard that in a while. Do it big, and I doubt they're going to do the 50, though. It's probably going to be 25, and then what we want to listen for is the words, right? So the way this works is 2 o'clock, the Fed announcement, the rate announcement comes out. 2:30, they let it settle for half an hour. Then Chair Jerome Powell comes out. He speaks for, 5 to 15 minutes, depending upon his speech. During that period of time, there's algorithms out there parsing every single word change in his speech, and they actually get the speech before he even starts speaking. So they've already parsed that data and looked for any little minute changes in the words. And then they say, what are the implications of that? What are they implying? What are they implying by that? And once they do that, then they open it up for questions, right? And so so there's 3 different points of volatility during this window of time: the initial rate announcement, the speech, and then the questions. Okay. And how does Jerome Powell do with the questions, and how tough are the questions? Again, like in the past, I mean, the media has been pretty gentle on the Fed. It's a bunch of, the guys, right? There's the Bloomberg guy, there's the CNBC guy, right? There's a couple other people, but those are the 2 that always get out of the gate first with their questions. And then you get other people that come in. You get Yahoo Finance and these other people that come in, and they ask questions. I don't know. It's going to be interesting to see if they're as gentle on the Fed as they have been in the past, because it's sort of a club, right? I mean, all these economists, when they go out to, Jackson Hole, Wyoming, it's the same set of economists that are in the same room at the Federal Reserve asking the same questions over and over and over again. So it's kind of a little club. So it's like, don't push the buttons here or there or wherever. But we got a lot of stuff changing on this Federal Reserve Board, all right? And so, again, President Trump's called Jerome Powell. He heads up the Fed, right? Jerome Powell. They called him Too Late Jay or Too Late, Powell or whatever it is. Okay. And so that's going to be one thing today. That's kind of what we were talking about at the beginning. What is going to happen with this battle that's been going on between President Trump and Jerome Powell, who's really just the head of he's the what's the right word? The poster boy, right, for the Federal Reserve, the chair. Okay. And then they have this board of governors, right? And this board of governors is 12 different branches, and then you got the New York branch. And then you get this rotating group in there, okay? And the board of governors. And what we saw this week was we saw this what was her name? I can't remember her name right now, but someone just last Fed meeting, right before, I can't remember her name. Anyway, she just left overnight. No reason, no explanation, nothing. Now, we know that if we looked into her history, she had a history in, labor statistics. So labor statistics since that period of time has been a big issue. Okay, so did she have some kind of ties to that? Did she just exit? Did they say, hey, look, you can either leave peacefully or we can blow this, we can link you up to these different things. I don't know what happened, but she just kind of left in the dark of night. Okay, that was one. Then we get, this Cook, okay, supposedly cheating on her mortgage, right? This has been fast-tracked through the court system. The courts find President Trump's been pushing on this, saying, hey, she shouldn't be in the Federal Reserve. She shouldn't be on this board voting because she's, a cheater and so forth. Problem is the court didn't, they stood with her for so far. Okay, this isn't done. All right, then we get this Stephen Moran, who was part of the Economic Council for the Trump administration. And now they just slid him in this week, got him voted through. Again, he'd already gone through the Senate hearings, so he was, it was pretty easy to grease him through there, but because he'd already passed it once. Now all they need to do is get him on the Fed, as one of these on the Federal Reserve Board, right, on the FOMC board. And what is this going to do, right? This is going to cause issues because you're going to get dissenters, all right? And what are dissenters? People who just, are going to problem makers, essentially. So the board's going to be 7 different people, right? 7 votes. And if we break this down, I think I've got some stuff here I want to show you. Let's take a look at this. Well, first off, let's take a look at the inflation. Let's just get a grip on what we're talking about with this thing here. All right, let me clear that and get this over. Okay. All right, so this is really what's happened with the inflation. Okay, we've got, so this is using just the consumer price index. So again, not a perfect measure, but a decent measure. All right, and you can see, the green line, this was from, 2009 till 2020. It was pretty steady, 1.8% annualized rate, pretty much linear, right? Just a nice straight line going across. Then we get 2020 and we get this acceleration. That's the red zone, right? It goes up at an 8.6% annualized rate. Then it tapers off a little bit, right? Because obviously there's a lot of pushback during the Biden administration. So what does it do? It tapers off a little bit, right? But it tapers off to only a 3.1% annualized rate. And this stuff builds upon itself, right? So it becomes this compounded rate of return or compound inflation rate, right? And then now we've tapered off to, 1%. Some places you can say it's maybe disinflationary, like we were talking about. So the key is we need a lot of disinflation or deflation to just get back to where we were in 2020, right? Because this is building upon itself and compounding. And this is what comes back and really hurts, the individual, right? The household. Somehow they're hanging in there, okay? But at some point it's going to crack, right? If we don't get this under control, if we don't get this inflation under control, it's going to crack. And the other problem is jobs is an issue too, because if people start losing their jobs, other people start getting scared about losing their jobs. And what happens? Now all of a sudden, this velocity of money, people will start hoarding money, right? Because, the guy down the street lost his job and the guy across the street lost his job and the lady behind us lost her job, right? So all of a sudden, everybody starts thinking, I probably should cut back a little bit. So that stops this velocity of money. It slows the economy down, okay? And that's the big fear. So again, jobs is a precursor to this stuff. So that's why they have to turn the angle here and look at the jobs front, all right? Okay, so let's look at some of these. I want to look at some of these dissenters. Let's talk about what's going on here, just so you can get a grip. Here's what we're looking at, okay, in terms of the board, how it looks now. So we have Jay Powell, okay, chair, Philip Jefferson, vice chair, Bowman, Christopher Waller. Both Bowman and Christopher Waller dissented at the last meeting, okay? Then we got Lisa Cook, right? She's the one that's been in the court system. President Trump's been picking on her because she's the one with the fraud, with the mortgage fraud issues, okay? And then we have Michael Barr, and then we have this new addition, Stephen Moran, okay, that was just added. And he's got just a short term. It's just a temporary term that ends in, basically early 2026. Now, if you take out, if you look at this situation, right, you're going to probably have Michelle Bowman, who's a dissenter. You're going to have Christopher Waller, who's a dissenter. And you're going to have Stephen Moran, who's probably going to be a dissenter. That's 3 out of 7, okay? If Lisa Cook had been taken out of the equation, it would have been a 3-3, and it would have been a head-to-head battle, okay? But that's not the case. She'll be voting today. And so let's take a look at this and just see kind of what the situation is here with what it looks like. Where does this dissenting tend to fall over time, okay? And so we've got this, right? If we look at under this Eccles, okay, during 1934 to 48, right, he had 0.23 dissenters per meeting, okay? Then Thomas McCabe, 48 to 51, 0. McChesney, Martin Jr., 0.5, okay, or half a dissenter. Then we get into names that we actually might know. Arthur Burns, okay, 70 to 78, right? That was during, Carter administration. Well, part of the Carter administration. You had a little bit more dissenting, 0.62. Then we get under this Miller, who was only there for like a year and a half, 1.42 dissenters. Okay, so, and then we get to Paul Volcker. Paul Volcker is a name you remember. Like, this guy was the strong man, right? He came in, he was the one that fought the high inflation rates for, that period of time. And he was tough, right? He was smart, two, he was tough, and he had big, broad shoulders, and he could carry the weight of this. And he had, 1.23 dissenters, right, per meeting. And then we get to Alan Greenspan. It starts to taper off again. We get Ben Bernanke, one dissenter, maybe every once in a while you get a dissenter. Same thing with Janet Yellen, occasional dissenter. And you can see the dissenting here was generally toward tightening versus easing. Okay, so we're on the flip side of this. We're in this easing. We're dissenting toward the easing side of things. A lot of these overall, people have dissented over tightening. Okay. It tells that could be a whole show unto itself, right? But let's not dive into that too much. We'll just take it for what it's worth right now. We're going toward easing, and we're going to have 3 dissenters. So higher than, I think 1988 we had 3 dissenters, but on average, right, you don't have that many dissenters, right? This is going to be kind of a rare event. Now let's slide down here and take a look at this. So if we look at this, I'm going to take myself out of here real quick. If we look at this, you can see the blue, okay, is the Federal Reserve Bank presidents, and then you have the Federal Reserve governors. And if we look here, dissents by the Reserve presidents and the governors, okay, you can see that there was a period of time through that 1960s through the early 1990s where there was a fair amount of dissenting on both sides. But really, since early 2000s until now, it hasn't been as much dissenting, and it's mostly only been from the Reserve Bank presidents, right? Not the Federal Reserve governors. Okay, so why does all this stuff matter? All right, well, here's why. Because without Lisa Cook in there, this would be a 3-3 head-to-head battle in terms of rate cuts or not. And we're talking about, okay, one, just moving in the direction of rate cuts, which I think is pretty much in the bag now. Although we do have people who still think that, they need to keep raising rates to fight this inflation. And again, this inflation thing is not in the bag. We don't have this thing solved, right? Again, all different types of inflation, but generally speaking, at the household level, we do not have this inflation issue solved. But the key is President Trump wants lower rates, and we have the jobs situation weakening. So it's very likely that we're going to get that. Now, the question is, we get 25 or do we get 50? Okay, 50 would probably rock the boat to a certain degree. And you would say, well, that's going to just make the market skyrocket. Well, not necessarily, because all of a sudden that can also backfire and say, wow, they must see something that we don't. And then there's fear in the market, okay? So this is, again, it's a confidence game, right? This is a confidence game. And when you start getting 3 dissenters and you get 3 on this side and 3 on that side, and it's a head-to-head battle and it's not a slam dunk, what do you get? You get, basically an attack on confidence. So we've got Stephen Moran now on the inside, okay, approved this week, slid through the Senate, piece of cake. And now he's actually going to speak at the, I just heard this morning, he's actually going to speak at the end of the day, which is sort of unheard of, because these guys kind of go into a blackout period. And then they sort of, once they have their rate announcement, then they'll start circulating, and then they start talking. And again, they defer back to the chair, right, and the board, right? They don't necessarily speak out individually. But I think Stephen Moran may switch that up today. So again, there's a lot of things going on behind the surface, right? 25, 50, rate cut, no rate cut. These are the things that are an issue, but then we need to look at what's changed in the statement. What are the questions? How tough are the questions? Okay. Is it the old boys club where there's really no tough questions and they're really right in line? Then what happens with Stephen Moran when he starts coming out and talking about this? And then what happens with President Trump? We're going to talk about that. He's over in the UK today and doing some tech deals with the UK, which is a whole another web to unwind. But so it's going to be a fascinating day from that standpoint. All right, and I don't think there's anything else I wanted to cover on this. I think we hit all that stuff. Okay, now let's check out the room here. We got 0 woke points. Good morning. Looks like energy. Yep, energy is a topic of the day on the generation side. Oklo, SMR, NLR. Yep, all good stuff. Like those prospects of new nuclear with the current admin looking more favorable. Yeah. So that is the case. I think that, these small nuclear reactors, we did a piece on DeWitt, okay, who leads Oklo, tied in with OpenAI, right? He's tied in with he's very tight with Sam Altman. And it makes a lot of sense, right? You're going to get these data centers and you're going to get this need for energy, and these guys would love to control their own energy. Boy, this is it. It's going to come down to a battle between. Let's back up. This week we've been talking a little bit about ethanol, okay, and corn, and what happened in the 2006 to 2000 timeframe. It was this battle between food for energy or corn for food or corn for energy. Okay. And it was this big battle. It hit all the, fronts of the news magazines and the agricultural space, but it was on everything. I mean, it was pretty much everywhere. It was this, it was this ethanol craze that was coming in. And we're going to talk about that today with this RBOB gas. Trump had asked a great question last week. Kind of went back to it yesterday, and I want to go into it a little bit more today on RBOB gasoline. Okay. I think this will help clarify her question even further. But but again, we're at this battle in time, right? Where it's this or that. This or that kind of a thing. And so we got this battle, right? And so is energy going to be for the people, or is it going to end up being for the data centers? That's the question, because they'll absorb as much. It sounds like they're heading toward the place where they're going to absorb as much energy as we can put out there. So how do you resolve that? And how do they get their privacy, right? They don't want us to have privacy, but they sure want their privacy and the privacy of control of their own energy source. So if they could get these small nuclear reactors next to their data centers, then they're these self-contained units. And that's very concerning for us, because we don't even have the ability to essentially flip the switch and say, no, we don't agree with that. Like, that's our ultimate vote, right? We could flip the switch and just shut down the power, and now these data centers go down, right? We've seen a little bit of resistance in Arizona where they resisted some of these data centers. The people came out and said, we're sick and tired of these data centers, stop putting them up. But, they're slamming these data centers up everywhere. I've got, I don't know, couple dozen of them going up, or probably a good 12 to 15 of them already in place, and another six that are going up. And so, and the huge, like, they got their own power, transformer, and their own little fenced-in yard of just all this switchgear, right, for the electricity. So again, this electricity is going to become a big issue, and I think Oklo is a potential problem solver, but they're great investments, and I think they're still probably a year or two out until they're actually going to put these things in play. But the technology looks like it's coming along quite quickly, and it's in place. They feel confident that it's not as hard as what they once thought it would be to make these small nuclear reactors. And this has been in the works for a long time, right? There have been think tanks like Battelle and others who've been making these small nuclear reactors. And just a side note, there was a period of time that that there's an old Silk Road, right, that comes out of China, right, and flows up through, up into Europe, through Italy, through, up through the European. And so they call this the Silk Road. You can research it. I won't go into detail on it, but there was rumors or talk that China was going to actually put these small nuclear reactors along the Silk Road to be able to, again, control their energy needs, right, to get things from China, right, these cheap products, really the junk that they make, and push it out through Europe, okay? So these small nuclear reactors have been in talks for a while. I don't know what's been driving the research behind them and who's been funding it and where it's been coming from necessarily, but it seems like it is there, and it seems like it is something that's coming, okay? So again, something to watch. The problem is Oklo's run up huge, and you really need to be patient, look for a pullback in this. When things get scary, try to find a pullback in there to buy it. All right, then we've got Rachel Hawk. What the heck? Yep. Hey, Rachel, good to see you again. Glad to have you back with the crew. Great to see you. And I saw you popped in on one of the shows before, I think. Let's see, we got Geo Rich. Good morning, Geo Rich. Happy Constitution Day. Good stuff. Okay, Geo Rich. Pump my bags, J Pal. Okay. All right. All right, Crash and Splash. Good morning. She probably had something to do with the fake data. Yeah, you're right. Crash and I know what you're referring to. Back to the lady who got canned, who just kind of disappeared in the night. Crash and Splash. She took the money from the wrong mafia. Exactly. What happened? Okay, Geo Rich, throw everyone off and increase the rate. TZ Burton, good morning, Craig. Good morning, TZ Burton. Rachel Hawk, uh-oh. When Craig laughs, that's not good. Okay, sorry. Well, Rachel, you missed us yesterday because I was in a pretty bad mood yesterday. Going through the stuff on JD Vance. I don't like what I'm seeing there, and it was the night before I was on a panel, or I was on with Aaron Day. We were talking about this technocracy, and he laid out a really great case for certain legislation that had been tabled, and all of a sudden, because of the Charlie Kirk situation, they were able to pull this stuff out quickly. I'm not going to go so far as to say it was planned, right, and they were ready for it. I'll just leave it at the point where they had some of these, Smith-Munt Act, some of these others were in play pretty quickly, and there's a lot of other things, right? At some point, we need to break this down and cover it. But one of the other things I'm doing is really trying to get involved in this technocracy panel with Patrick Wood and Courtney Turner and Aaron Day and others, potentially an attorney or two that might come in on the panel as well, because I think this is one of the foremost issues that we can have an impact on, right? Like, I think war is a big issue too. There's just nothing we can really do about it. There's plenty of people saying we don't want war. That doesn't mean that the governments and the administrations won't take us into war, because that's what they ultimately need to do to wipe the slate clean. So there's not much we can do on that front, but what we can do is try to call out this technocracy front, right? And that's a battle that we can fight. So that's a battle that So anyway, so I wasn't laughing much yesterday, Rachel. So enjoy. I'm enjoying my own laughter today, if that makes any sense, because it was a tough show yesterday. To pick on things that it's just hard when when you have to deal with realities of things that you didn't really think were there, and then all of a sudden they are, and then you have to accept them, and it's a big transformational shift, and that was it's just part of this transformational shift for me that I don't like what's going on with this technocracy. I don't like how it's unfolding, and it's not depressing. It's mentally and physically draining, right? To see what's going on and figure out how do you talk about this, because it's big. These are big topics that are very hard to break apart and tokenization, right? That's a whole animal unto itself. Technocracy, what the heck is that? Who the heck's involved in it? How long's it been going on? How do you prove that technocracy is in play? People say, yeah, I get all that, but I don't buy it. You know what I mean? Like, how do you make your case that this is something we need to pay attention to? And who are all the players? And boy, I mean, I could sit here today and just go through the same thing with all the technocracy stuff I just saw overnight, right? Headlines coming out, different things. And the biggest thing I think here is to create a backbone, okay, a spine upon which we can attach things like JD Vance, starting to build this big, history on how he came about, how he became what he is, the vice president, who's involved in that whole process, right? And then these visits that he takes, like to the UK. Okay, he took a summer vacation to the UK, to the Cotswolds, and he wasn't very well accepted there, right? They booed him out, and he met with people he shouldn't have met with. He didn't stay in his lane, right? He was meeting with Nigel Farage, he was meeting with David Lammy, okay, and I'll go through that briefly, but the point is, if you don't have the backbone, if you don't understand how this thing is organized, you can't even attach current events to it. So that's what I really want to get to with Aaron Day, is creating this structure so that we can attach current events to it and build our case, right? So that it can become part of the narrative, right? We can start talking about this technocracy and people understand what it is and how it's actually, and relate it to things that are going on now, right? There's a lot of backpedaling we need to do to explain what it is. But then once you start getting there, I don't know if it's like, if you can ever just absorb it all in one big bite, right? It's this little bite thing where you just have to chew away at it. Because that's what I see Aaron doing. That's what I see Courtney doing. That's what I'm now doing. Patrick Wood's been doing that for 30 some years, right? Is basically the technocracy, guru, the go-to guy. So anyway, so that's kind of, so anyway, I'm enjoying the smiles today for whatever they're worth. Okay, so let's take a look at the economic data today. I think we have a little bit of stuff coming out. We need to look at yesterday and some other things. So let's jump in here. Wrong one. There we go. Okay, let's get going through this stuff here. So this was our week. Again, we talked about this. Talked about China, right? This fixed asset investment, the foreign direct investment, the issues with that. We talked about that on Monday, okay? Sort of a big deal, okay? Not to go back through it, but we're watching this to see how long can China go without doing a major stimulus plan, or how long can they go before they start to fall apart and they can't save their economy, and how long until people get upset, right? We've seen what's happened in Nepal. We've seen people rise up. We see, Kyle Schwab saying a couple years ago, we're going into an angrier world. Well, why is that? Because we have debts that the administrations, these governments have run up. They can never be paid back. So we need a reset. The question is it a reset for the people, or is it a reset for the technocrats, the few, the elites, okay? And that's the big thing. And I think China plays a big role in this. And right now I think we're just letting China go run wild for a little while, or run forward, maybe not run wild, but move forward, and then just watch their economy slip. So we covered that, I thought, pretty extensively. All right. Then we got a kind of a weak read out of this Empire State Manufacturing Index. We're going to get another one this week on Thursday, the Philly Fed Manufacturing Index. I think I confused those the other day, but we talked about this Empire State. It was a little weaker than expected. Then yesterday, we got retail sales much better than expected. We'll go through that here in a second. Industrial production good. Housing basically came in at 32, slightly down, but not a big deal. Today, we get a couple more data points on housing. We get building permits and housing starts. Watching that closely, again, ties to the consumer, ties to the bedrock of the U.S. economy. The German 30-year bond auction, we'll take a look at that. It came in actually better than expected. It had been trending pretty poorly. Rates were actually down a little bit, and the bid to cover was better than expected. So the trend still isn't good, but this was a good data point on that. And that'll save me from having to cover that too much, okay? Because we watch these debt markets. Again, that's how we're going to know if a sovereign debt crisis, if we see these, people not showing up to buy the debt. That's the big factor. Okay, then we get, then we know that we get Bank of Canada rate announcement out today at 9:45 a.m., I think. We get ours out at 2. Then we go right into UK tomorrow, the MPC, right? They'll have a rate announcement tomorrow, and we'll want to watch the vote, okay? Because this vote was a debacle for their last rate meeting, right? They couldn't even get a vote off. It was a train wreck. Philly Fed, we mentioned that. Then we go right into the Bank of Japan policy announcement. Now, this will be the first window of time without the Prime Minister Ishiba, okay? Ishiba basically fell apart. The LDP, I think it is, the party kind of blew apart, and a couple months ago, and he's been under pressure for a while, and finally he threw in the towel over the last week. And so the question is, what are these bond? Is it going to rattle confidence there in terms of? I don't think so, because this guy was pretty weak, and he'd been weakened after the elections this summer. So I think he was pretty much like, even though he was there, he kind of was non-present, really. And we've talked about this, right? The leadership in Japan right now is incredibly weak. Not like it had been under Trump 1.0, right? Japan actually had decent leadership at the central bank, and leading the country, the government. It was fairly strong in Trump 1.0. It really has fallen apart over the last 4 years, and it's in a really weak stature right now. So keeping an eye on that. And then this weekend, we roll into these Eurogroup finance meetings and this ECOFIN. Nothing we're going to talk about. That'll happen pretty much late Friday and into the weekend, right? One of these get-togethers for the whole weekend kind of thing. All right, let's roll through yesterday's data quickly. Again, retail sales expected at 0.2 is actually up 0.6. That was a great number, right? We watched that come through, and we watched all the components. It looked really good, okay? Import prices expected at minus 0.2, came in at 0.3. I looked at the chart. Probably not worth bringing up or mentioning. Just paying attention to it, right? We'll leave it at that. I don't want to spend too much time on it. Then we get this NHB housing, like we said, pretty much unchanged. All right. And then today we get a pretty good swath of data coming out. We had the England CPI year over year came in. I think it was pretty flat. I'm pretty sure that's right. I don't know why I have it in red, but I think it was flat. So, and then we have Lagarde was speaking out. The European Central Bank leader, Christine Lagarde, was out speaking. She's speaking quite a bit. What are we watching for there? I'm going to show you a chart of the euro. It looks like it could be at a potential double top here. Again, the dollar's been weak, right? Still hasn't broken the apex of our triangle, but it has been weak, okay? And it does have an energy build, so it is at a dangerous spot where it could see, an acceleration and downward pressure. I still think this dollar could just surprise everyone at some point, right? Now, if we start breaking this, this apex, then you have to respect it, right? The downside. And I'll have to admit, okay, I've been talking about this thing for a long time, and look, the dollar might be falling apart. I would rather see the dollar fail on the upside, because I think we, the people, benefit by that, okay? We get deflation, we get more purchasing power, we're a consumption economy. It would give us power around the world in terms of consumption. We are the beacon for freedom around the world, even though we have a ton of issues, okay? And we've pulled off more coups d'etats than anybody in the world. I mean, we are far from perfect, but we have the most opportunity because of the Constitution, because of the people, because of the culture, to be the leader of freedom. And even though I'm down on things because of this technocracy, I mean, we still have the chance, right, to do this. And so without us, it doesn't happen. So again, if that's what we're kind of watching for there. All right. And then, okay, 30-year bond auction. We keep moving with this. So we had the the expected was 3.28 for the yield, and it came in at 3.25. Bid to cover was expected at 1.0, and it came in at 1.8. So that means more people showing up to buy the debt than anticipated. Again, trend is still down, but this was a decent number, right? Both things going in the right direction. Lower rates and more people showing up to buy the debt. All right, Bank of Canada rate announcement, it's expected to be at 2.5%. Again, we haven't heard much from Mark Carney up there. Mark Carney is definitely a globalist. The question is he getting kind of, we're going to wait, right? We see Scheinbaum trying to make a deal with China. I think President Trump behind the scenes is putting pressure on Mexico to put pressure back on China. We've talked about this. Rather than go directly at China, okay, right at the jugular, what we're doing is we're just kind of toying with China by having other countries, making deals with other countries to put pressure back on China. And why does Mexico matter? Well, the Miadora, the transfer of goods from China through Mexico into the U.S., across that southern border multiple times, for automotives, for other things. So again, you can put pressure back on China via Mexico, and I think that's what's going on. So we see that with Scheinbaum. I don't know if Carney's quite yet playing ball. If their economy weakens, he might have to play ball. But again, I think he's putting up more resistance still as a globalist, okay? Still kind of hanging in there as that globalist, all right? And then we get crude oil inventories out today at 10/30, 1.4 million barrels, the expectation. We looked at that data point. I think I pulled it off my chart. But again, over 2025 and into 2026, we're thinking it's looking like surplus is going to build in this crude oil space. And we want to keep that in mind, okay? That, there's, again, I'm not such a huge fan of fundamentals, and that would categorize under the fundamental data. But again, awareness never hurts, that this is what they're anticipating. And, that's by the IEA. So it's the big, data producer in the energy space. So again, we have to respect it. In the end, I want to look at what price is doing, right? And what the charts are doing. And if we have harmonic structures, what's it doing relative to those harmonic structures? That, to me, that's more important in how I'll approach things. Then we get the FOMC rate announcement out at 2. We talked about that. And then tonight we get a little bit of data out of Australia. It's their jobs number expected at 21.2 thousand. Just watching this as sort of a sideshow. All right, New Zealand, Australia. It's just important to keep touch with, one, the commodity currency, which is the Australian dollar. Same thing with the Canadian dollar. It's a commodity currency. And the fact that it's located close to China. Sometimes it gives us a read on if we see things going, we see jobs decreasing in Australia, and we can find out why. Sometimes we can relate that back to lack of demand in China. Okay. So again, I know it's kind of kind of going around, and it's a little bit convoluted, but sometimes it gives us a read, right? And the markets will look at that stuff. Okay. Couple headlines here. Let's see, we got the Fed meeting, jobs and dissent. That's what we're talking about, a shift to jobs and the dissenters, right? Do we get 3 dissenters today? And what is Jerome Powell? Does he try to front run that in his statement? Does he get questions on it? Okay. Does he get a lot of questions? Does that cause upheaval? Again, 3 data points for those who are out there trading or involved in the market. You're probably going to get 3 points of volatility today based off of that. Okay. Then we get Trump admin in the UK. Technology. I want to talk about this let's dive into this. This is probably the biggest story of the day. Okay, so President Trump is to meet with King Charles, right? King Charles at Windsor Castle. And I want to back up a little bit here and recall when Keir Starmer came to DC, I can't remember, sometime over the late spring, early summer. And what he did is, remember the letter, right? He gave President Trump, and it was supposed to be some emotional thing where he gave this letter to President Trump, and it was an invitation to come to the castle and meet with the king. I mean, to me, that's the last place I would want to go, right? But again, they made a big deal about it. And so, to me, the castle and the king is nothing more than just the biggest flag you can have for ripping off the people, in my opinion. I don't see... Anyway, the point, okay, back to the point. Keir Starmer was looking, at that point in time, Keir Starmer was looking pretty good in the polls, right? The people actually, he was trending in a good direction, or at least a flat to good direction, okay? And he had this fast track trade agreement that he announced in May, okay? And then they signed it. So it must have been April, May when he was at the Oval Office with President Trump. And then they signed this deal at the sideline. So again, they took multiple victory laps on this, right? They announced the deal, then they re-announced the deal, and then they kind of re-announced the deal again when they signed this on the sidelines at the G7 meeting, right? And kind of made a big deal about that, stole the thunder from other things going on at the G7 and so forth. President Trump's really good at that. Now, Starmer's approval rating's at 22% or less, right? Their economy's not looking good. Rachel Reeves of the Exchequer, okay, we've seen her in tears over the last month or two, okay? It's a train wreck there. The question was to oust her or keep her. Okay, she's kind of like our Treasury Secretary. And then, why is that, right? They were taking away the people's health care, government services, talks of taking away holidays, right, in the UK and even in France, right? So that whole region's been talking about, that they're under stress when they're taking away things that the people have come accustomed to, okay? That's part of their culture, right? Holidays and things like that. Right. And then we had this forced departure of Starmer's deputy prime minister. Okay. So things aren't so hot there. And then on top of that, right, we get these Epstein files released. Again, I haven't seen them. I just saw the headline. But the point is there's ties here to the king with Epstein. Okay. And his brother and so forth. So is that going to come up? Right. That's kind of a little bit of pressure on, quote unquote, the king. You know what I mean? As the Trump administration is there, and what are they doing there? Right. That's the real thing, is what are they doing there? Well, let me cover this thing real quick here with Vance. All right, let me just set the stage with this, because we're going to have Marco Rubio there. I would imagine J.D. Vance will be there, and other parts of the administration. I don't know if Scott Bessent will be there. I don't know if Howard Lutnick will be there. I don't know who's going to be there, right? But again, want to see who's there, who's playing a role in this, and what do they have to say before, during, and after. Okay. Now, just a little bit on JD Vance because we pounded on him pretty hard yesterday, right? Is that he spent his summer vacation there, okay, in the Cotswolds. And when he went there, there were protesters that had signs up that said, Vance not welcome, okay? And then he met with Nigel Farage. Nigel Farage is kind of this renegade, not a bad thing, but he could even be some kind of an operative, right? He was very involved when the Brexit occurred, right? When the UK exited Europe. And so he met with him, probably a little bit out of his lane, right? Then he had this clash with Keir Starmer on multiple fronts. He also had the remnants hanging around from that Munich speech, right, where he kind of laid into them on free speech, right, where he said, the Europe has had a retreat on free speech. Okay, again, a good topic, but probably not welcomed by that crowd. It was pretty intense, right? I mean, that's when those are the things you can get behind JD Vance on, right? He was very forceful, very directed, and he made his point, right, at that Munich speech. Okay, right out of the gate, within a week or two of becoming vice president and coming in after the inauguration. All right, so then he also met with a guy named David Lammy, right? He's their UK foreign secretary. Probably shouldn't have been meeting with him, okay, outside of his lane. That would be more for something like, I don't know, Marco Rubio or something like that. Anyway, just to add a little salt to the wound, David Lammy and JD Vance were fishing, at wherever David Lammy hangs out in the summer, and they were fishing without licenses. Okay, so apparently that backfired on them, and that hit a bunch of headlines. The point is that the media and the people were looking at anything they could to attack David Lammy and JD Vance. Okay, so what are they up to, right? Is JD Vance setting the stage for something, for 2028? We talked about how he kind of I feel like he hijacked Charlie Kirk's show the other day, right? To basically put his arms around anybody he could that was part of Charlie Kirk's crowd. Okay, that's my take on it. All right. And so that's kind of the thing on this JD Vance. I just want to throw that out there to, again, as part of a follow-up as to yesterday, and then also who are going to be the players at this meeting in the UK. Now, who else is going to be there, right? All the tech bros, okay? So we've got $10 billion lined up to build out the AI infrastructure in the data centers. So this is what it's all about, right? Or these tech deals. And we have involved in this the president, we have the prime minister, and we have the royal family, okay? Prime Minister of UK is Keir Starmer. Okay, so we have who's going to be there for sure. OpenAI, okay, NVIDIA, Microsoft, and Google, highly represented there. They're all lined up and ready to invest in the UK, okay? Technocracy, right? All this is energy intensive. So this goes back to what we were talking about before. The UK, the king, quote unquote, the king, right? They bought into this whole climate change scam, right? So they went heavy wind energy. They went heavy solar. They went into all these things, right? And they got away from the coal. They got away from the nuclear, right? They got away from these things that are stable, sturdy, proven energy producers. So how are you going to bring in these data centers with wind? Wind has its moments where it's incredibly great, right? But overall, it's a dud, right? It just can't, one, it's not reliable. It fluctuates, and it's very expensive to maintain. So it's a loser over time, right? The wind has its moments, but it's mostly a loser. Doesn't mean it can't be a part of an energy solution, but as it is right now, it's overall a loser. And the UK is suffering greatly from this, right? The big investments that they've made in this, and it's almost irreversible. So now you're going to go in there with these data centers, and you need energy. Where are you going to get it from? You're going to get it from the people, right? So this isn't going to be good, right? If you can't rely on again, this back to that ethanol, right? You can either have corn for energy or you can have it for food. Can you have it for both? It's this or that, okay? And that's kind of where the UK's at. It's either energy is for the people or it's for these data centers. What are the data centers for? Well, they're to take people's input, calculate it, store it, build the AI based off, what it retrieves off of that, build these large language models and these different things based off of the people, and then essentially, supposedly give them something back out of it, which I still question this whole, again, this goes back to the technocracy, right? So again, right, so there's a problem here. There's a big problem, and that's what we're going to want to watch for, okay? So again, who's going to be there? Marco Rubio, JD Vance, and who else is there that's going to give us some feedback out of this? So I'm going to be looking for, what the feedback coming out of this is. All right, and And let's see here. Let's see if there's any questions in there. Fishing license is a tax on fun. Yeah, that's right. Okay, so we got a few. I'll go back and watch for sure. Okay, let's see if they say come. So Crash and Splash says, "Come along with us. Let's lie in wait for innocent blood. Let's ambush some harmless soul. 12, let's swallow them alive, like the grave." Proverbs. Oh, good stuff. Thanks for putting that in there. Trump meeting with another devil. Does Trump have one normal, decent person around him? Maybe I'm forgetting someone. I think they voted not to release the Epstein. Yeah, I don't know. I mean, if that just, I just saw that there was a release on more stuff this morning. I don't know. I mean, it's just a headline I saw, and I thought, oh, this is interesting. Tied in with the king, the king, right? Tied in with his brother, tied in with all that stuff. It could be interesting to see a clash there. We'll wait and see. I don't know if they've decided not to. Okay, so let me keep rolling here. Let's see what else we've got. Okay, the Japanese auction post Ishiba. Now, this is what we were talking about. Bank of Japan meeting Thursday night without Ishiba. What's going to happen? Is there a lack of confidence, or was there already a lack of confidence? When things are wrung out, you can't go any worse, right? So maybe that's where Japan's at from a confidence standpoint. Maybe they get a better, but the question is, if they couldn't get good leadership before, where are they going to get it from? There's always someone up and coming, and there's always a chance, right? But it's going to be interesting to watch what goes on with Japan. And why does this matter? Because these are on our watch list, right? Europe, sovereign debt crisis. Japan, sovereign debt crisis. Potentially even Australia, New Zealand could be, again, we don't know where it's going to come from, but at some point we're going to get a default on some bonds, right? Somebody's not going to show up to buy the debt because there's something going on that finally gets revealed, and people aren't going to want to spend the money. All right. Okay, let's see what else we've got here. Insider selling. Ah, yes. Okay, so I want to get to this one. So we've been looking at this potential top in the market, and let's hit some charts here too while we're at it. Okay, so I want to show you this. I'm going to put this up while I'm setting these charts up so you can take a look at this. All right. Okay, so what we can look at in terms of, this would, so let me just come in here for a second and explain this. So we've got a couple points in time, right? This is over the summer. And you can see I marked with the black marks, 1st of August and again the 1st of September. And this is insider buying and selling. Okay, so this is corporate. This would be executives and management inside companies. And they measure this. And again, we think the data is right. You don't always know all the data because there's a lot of inconsistencies to this. And there's a lot of these are buy programs and sell programs, and they're already put in place years out in advance. Okay, so that's what's hard to differentiate on this. However, if you look at this chart, you can see it's been a predominant amount of selling going on, okay, all summer long. And then we see this big spike, okay, that just occurred recently, right? What is it? I don't know, last week, I would say, something like that. You see this big spike down. So those are the things that kind of alarm you. Now, when stock markets are at all-time highs, who would blame anybody for taking profits and selling some? Okay, so the question is, how much is too much before it becomes an issue? And that's what we want to keep in mind, right? So that's what this gives us is very little green bars, which means insider buying, okay? A lot of red bars, which means insider selling. And again, a lot of these are pre-programmed sell programs, so to take profits, and we're at all-time highs, so who can blame them? It's just how much is too much, and what is it when it starts to give us an indication that there's a lot of insider selling, even though they might be putting out a strong narrative. Everything's great, earnings look good, our forecasts look good, but by the way, we're selling, right? Let's not tell anybody, but we're dumping this stuff. That's what we're really watching for, right? Is that what's going on? And so when we watch these markets, what I'm watching for when I trade during the day is, do we see footprints, right? These guys would be in that elephant category, right? The institutions would be in the elephant category, right? So when elephants leave footprints. And so when they move about, right? And so when these guys start to move about, they leave footprints. Is this a little footprint? Is this one of those footprints that we want to see? Okay. That's what I wanted to show with that. All right. Keeping that in mind. Okay, so let me jump over here. Let's take a look at this. Okay. So let's take a look at these charts. And I want to go through, let's go first. I'm going to introduce a new one today that we've talked about, but we've never really looked at here. And it's going to be interesting for us, I think. It's the Russell 2000. Okay, so here we have, So here we have the S&P 500. We're not going to deal with this week. We've covered the transition from the September to the December contract, right? We've tried to make the case for how murky it made things. Tried to make the case on how well the September contract reacted to the harmonic structure. We've made the case here, right, that the December contract, okay, has also shown respect to the full upside objective, the bright green line, right? It got there. I'm going to mark this with this rectangle. It got there once, twice, okay, got there 3 times, right? And then now it's above, right? And I'll just change this to some other color. Let's go to, just make that, we'll just make that turquoise. It doesn't really make sense. But anyway, so now we've gotten through that. And what we see is a difference, right? Again, as this becomes, the December becomes the front month contract, more volume comes into it, so we get more bars. In the past, when we see all this data, going from the lower left all the way up till we got to the bright green line, it's going to mimic and it's going to follow the front month contract, which was the September contract, but it's not going to have a lot of bars, a lot of data, okay? Because again, it's not the front month. It's not the one that's being traded the most, okay? Now that September's about gone for good, right, into the archives, and the December contract is now coming about. So we're just going to focus on the December contracts going forward, okay? And what we want to see today is, now that this market's kind of going sideways, right, up at the top in that turquoise box, does it come back in and test the 65.74? We talked about this since way, way back, right? Months we've talked about this now. We want to see, can it get to 65.74? And if it does, what does it do when it gets there? Well, we saw it. Now we see, we saw it on the September. Now we see it on the December. Hit it 3 times, and then it's blown through. So again, it's a line in the sand, right? So I'm just going to go ahead and flip this over as we do, right? We flip these things over and call them lines in the sand, okay? And so now it's a white dashed line, okay? It becomes important, and we're going to use this to measure the risk. So if you want to take shorts with the idea that this thing can come back into this white dashed line, just be very careful and keep it small. It's really not the time to be, to get too aggressive. Now, if it starts to get back below 65.74, if for some reason today something comes out and the market reacts and it sells off back to that 65.74 and it gets through it, now you can use that to manage risk against, okay? And you can start thinking about a short position. There's a lot of things that I think could be marking a potential top here. What I don't like is what I've seen through this, right? The market went up there, tested it a couple times, and as soon as that contract rolled, right, it gapped through, all right? And now it's above. And it's doing this in the S&P, and it's doing this in the NASDAQ. So that does not make the case that we're at a top. It can change quickly, right? Today, we got 4 central banks, U.S., Canada, England, and Japan, announcing rates this week, right? We have a little bit of data. We have President Trump in the UK. We have, again, there's always enough things going on that something can happen and cause the tables to turn. So it can change very quickly, right, is my point. So right now, the bias is still to the upside, surprisingly, okay, after this just massive run. And like we talked about the other day on debt day, right? We, I think I said, we cracked 37 trillion earlier this year, and I said, we're probably at about 37.5 trillion. And sure enough, after the show, I pulled up the debt clock, and I'm like, yep, there we are, right at 37.5 trillion. So we haven't stopped spending money, right? We haven't curbed a darn thing, so we continue to run up debts, all right? Nothing's changed so far, right? Hopefully, the tariffs and these other things start to curb some of that, right? But we're already going into a, potential government shutdown again the end of this month because of, right, funding and all this other narrative that we always get, right? It's right back, and it's like when I was talking with my brother the other day, it's like there's like 20 things on the slate, and they just, okay, what do we cycle back in the news today? Oh, this one, debt. Oh, what about COVID, and the shots, and right, they just circulate. Epstein, and now it'll be Charlie Kirk will be another one of the ones in there, new stuff, right? So it's this constant circulation of information back into the system, right? And that's what it feels like, right? We just get used and abused and run through the mill all the time. But that being said, what we're watching for this is what does this S&P 500 do? And this is the biggest, broadest measure of the U.S. stock market. So that's why we watch this one. All right, so let's take a look at the NASDAQ. Let me flip over to that one. So here's the NASDAQ, same thing. Yesterday, we turned that to a white dash line. It's going to take it a lot to fill in. Again, we're on the December contract, right? If we look at this September, it's closer to that white dash line, right, which is the 24,165. All right, so the question is this, does this thing, what is the NASDAQ going to do here, right? Does it come back and retest that 24,165, okay? If it doesn't, then the bias is still to the upside, and this thing can run away like a freight train. It's crazy, right? I mean, if we look at the daily on this chart, right, we get this pullback in here, to this area, okay, during the initial fears of the tariffs, the Liberation Day, all that kind of stuff, plain vanilla pullback. We talked about nibbling back in there, and I just didn't think this market could take off like this and run, but this market just keeps doing this over and over and over again. And are there things changing? It could be accelerating to the upside. You can't rule it out. Again, what are we looking at? The 24,165, the 65,74. If it stays above those, we have to respect the upside. Okay. And let's look at this one, the Dow. Okay, the Dow has not been participating, right? This is the Dow. You can see 5 circles I have up there, the yellow circles up at the top, right? The red zone was that red flag area where nobody talked about the 12 straight down days, which gave us an idea. Again, elephants leaving footprints, right? That's what we're talking about. That red is an elephant leaving a footprint. 12 straight down days, and the media never covered it, right? We were, as far as I know, we were the only ones that talked about it in here, right? On World HD. And we talked about it over and over and over again, right? And then we get the sell-off, right? Beginning of next year. So this is the elephants leaving the footprints, right? Now we're up at the highs. Typically, when we get this many tests of the highs, Dow will end up ultimately breaking through, right? That's the statistical probability. Again, so it doesn't look good for a potential top at this moment in time, right? There's a lot of other things. I can make a case for it. Again, insider selling, right? All these different things. We want to watch what happens today, this week, into the next couple weeks, see if there is a potential top forming. What does it do around these harmonic levels? That's our lines in the sand. And this Dow, what's the Dow going to do? Right now, it looks bullish, even though this thing is it's making new highs, but it's not making new highs like the S&P and the NASDAQ. It's just not participating like that. Okay, here's a new one we want to look at. Let's throw this one in the mix. We've got this Russell 2000. This is 2,000 of the smaller cap stocks out there. This is a weekly chart on it, okay? And you can see it's stuck up there too, just like the Dow. So what is it telling us, okay? Here's what you can think about. Again, what do we get out of these different things? NASDAQ, tech stocks, okay? Right? Mag 7, right? Russell 2000 is kind of the opposite of that, right? It's not big. It's not a lot of tech, although there is some small cap software in there, small capitalized stocks in there that are software. It does have some REITs in there, real estate investment trusts, and it has a lot of non-profitable companies in there. It also has regional banks. It's highly correlated to the KBW index, which is regional banks. Okay, so again, how could if we're going to get some other form of banking because of the Clarity Act and the Genius Act, right, and stable coins and Tether. And, just to add salt to the wound, okay, to yesterday, I just want to throw this one out there. At some point, we'll come back and cover this, right? We have, and this is going to be a side note, so just kind of put this in a little capsule, right? Tuck it away, because I don't want to get into it too deep, but we have President Trump and his 2 sons are heavily involved in crypto, okay? That's fine, right? Then we have Howard Lutnick, right? His 2 sons are running Cantor Fitzgerald, his old company, okay, that is now Tether, right? And these guys are set to make a fortune, right, with Tether, and being the conduit between, the dollar and the debt, all right, and the stable coins and the debt, right? And then we have Witkoff, right? Steve Witkoff, the liaison to Israel, who's also been doing negotiations with Russia. His son, Chase Witkoff, is the one that's leading World Liberty Financial, okay, and where the Trumps have involvement in this. So I'm not here to try to shoot down the administration, but it looks pretty fishy, right? When you've got these sons, right, leading three major players, right? I think if Scott Bessent actually had a son, which, only by adoption more than likely, based on his situation, the point is, would his son also be involved in this? How many more people, how many more leaders in the administration can you now put their sons involved in this crypto? So I guess the one takeaway is this. If you want to get involved in crypto, figure out what they're doing and probably ride their tails, because they probably know what's going on. And not only they know what's going on, they're probably creating what's going on. There's other options out there, though. And that's what we're going to talk about with Aaron Day, the Zano, right? Things that get us off the grid, that give us privacy, right? That turn the tables for us, right? That create these parallel systems for us, right? And that'll be topics to come in days ahead. If you want privacy, if you want alternative things, if you're concerned about where this technocracy thing is moving, that's might be something for you. Okay. That being said, I just want to throw that in a capsule. That's not I just couldn't resist. All right. So back to this. Okay. The Russell 2000 index could be telling us something. If we get this consolidation of regional banks that gets some event, right, that causes them to get usurped up into bigger banks, which they've talked about, they want to get us into a couple banks. That way it's easier to control, right? Control, social credit scores, all these different things that the technocracy keeps driving toward, right? If that's the case, then we would see this Russell 2000, it's highly correlated to the regional banks, start to suffer because the regional banks is a large component of it. All right, so that's why I'm introducing this Russell 2000 now. One is another index to look at that's U.S. based. So we've got the bases covered, right? We've got the Mag 7 with the technology. We've got the S&P, which is a broad measure. We got the Dow, which is probably a sign of capital flight coming in from other countries. So if we get into a war situation between Europe and Russia, capital will flow. Where will it flow? We'll see it show up in the Dow, right? We got this Russell. If we see the technocracy taking place in these regional banks starting to come apart, we're going to see it come apart here, right? So we got a lot of angles on this thing. We got a lot of bases covered. So that's why I wanted to introduce that one. All right, let's head over here and take a look at the 10-year note real quickly. The 10-year note's going to essentially what we're looking for is if we get 25, probably a little bit of pressure at the upside, maybe a little bit of profit taking, but ultimately I think in the next day or two we'll see this again, the black lines in the middle, that's the price. We'll see it advance to the upside. If it advances the upside, what does that mean? Yields are coming down. That's what President Trump, that's what the administration wants. We've got that target up there. We got the yellow circles, that the couple messy yellow circles that look like they're just floating around up there that are left over from other talking. That's kind of where we could see this thing going, is the upper end of this. Again, I think the overall long-term trend of this is down. This is we get a big move down. We need a consolidation period. I think that's what we're in. Do we get lower rates for a while? Potentially, probably. It looks like it's heading that way. The Fed's on board. President Trump's clearly on board. The administration's on board for lower rates. Lots of good reasons for it. The unemployment, the right? Maybe not the inflation, but lots of housing, all these other things, right? Good talking points around it. What we're going to watch for today is 50 basis points would probably drive the black price through that bright green line, solid green line that's in the middle of the screen, right? Again, what's our line in the sand? The white dash line, 111.10. We've been talking about that since I think the show started back in August of last year, July of last year, 2024. So again, that 111.10 is a significant line in the sand. That starts to give way, we got big problems, right? But for right now, this market looks like it's headed higher, and that makes sense, right? That fits with everything. No matter what they try to tell us, this isn't lying. All right, then let's go to, I want to look at this euro quickly because I think this is a better way to look at things than the dollar right now. All right, so let's take a look at this on a daily. So what I'm seeing here is a potential double top, all right? And, me, I'm hanging in there on this dollar still just because, one, I think it's good for the people, but two, I think it's a more realistic way to take the dollar out without causing huge major dislocations for the U.S., right? It would create major dislocations for a lot of the other countries in the world. Okay, but here's a potential double top in this euro. So we want to watch this. What happens today? Again, if we believe in the Swiss franc going lower, euro going lower, Australian dollar, Canadian dollar, British pound, all these things on one side of the teeter-totter to the dollar. Dollar's on one side, all these others in the basket are on the other side. If we think that that's going to switch, right, and the dollar's going to go up, and all these others are going to go down, this is one of the first places to look because this is 50% of the weight on the other side of the teeter-totter from the dollar. Okay, so again, when one goes up, the other goes down. When one goes down, all the others go up. Okay, so dollar down, all these other baskets up, in the basket up, dollar up, all these others tend to go down. Not always purely that way. Some will go up and down more than others. But generally speaking, when the dollar goes up, the whole basket on the other side goes down. So I want to watch this potential double top up in here, right? Okay, let's keep rolling here. We want to get through. I want to look at crude oil, and I want to talk about this interesting thing called RBOB gas today. Okay, so crude oil, again, quickly, 63.18, the white dash line. We've been talking about that forever, 79.37. We talked about that. Connected between the Israel stand down with Hamas and then this recent invasion of Israel into Iran, okay, which is talking like it's going to heat up again. Israel's probably going to go back in and maybe drag the U.S. with it into Iran, right? And if it is, it's probably going to require troops on the ground. It's probably going to get bloody. So again, something to keep in mind, right, with this crude oil. Do we get another spike potentially here? What's going to happen? If crude oil can't spike off of something like that or fears of that building, then crude oil's there really is an issue with crude oil. Okay, so our line in the sand is a 63.18. We've got this harmonic structure, the pink shaded zone. Again, I've talked about this potentially being polluted. I won't go into great detail on that because there's a lot of math behind it. But the point is, the real thing we want to watch is a 63.18. Okay, let's roll on here. Let's take a look at natural gas. We haven't looked at that in a while. Here's natural gas. Again, we have this harmonic structure. I like this harmonic structure. If you look back in here, this contract's rolled again, so we can't see everything. But this thing had a beautiful couple reactions up at the halfway on the upside, okay? Technically, it looked a little overdone. We talked about that. We weren't surprised by a pullback. We get that. We have this harmonic structure. This thing's been hanging around forever. But if we look at this on a longer time frame, okay, we look at this natural gas on a longer time frame, this is great, right? We get this white dashed line that goes all the way back into here. You can see how many reactions it's had to this, right? You can go all the way back here to 1990, okay? You can just see reaction after reaction after reaction to this area, okay? You know, and, okay, here's another one, right? And here's another one right in this area. Anyway, the point is you can go draw that stuff for a long time. The key is what we come back to. We came right back down to this 256.60 per MMBTU. So again, natural gas looks good. We've got a little bit of an energy build, right? I've got that in that blue box right there where the red's inside the white. So we've got a little bit of an energy build here in the natural gas. And the question is, what's going on, right? Again, natural gas can be turned into liquefied natural gas and can be transported to Europe. Okay, is that part of what this UK deal's about? Is this, again, Poland, energy to Poland, natural gas, right? This is back to Trump 1.0. We could, you know, I wish we had, well, I guess we have no limits, right, in terms of time, but, you know, now that we, you know, we don't have anything coming after us, but I guess the natural gas is a great temporary filler between the energy we have now, okay, coal. I think nuclear is going to continue to come online, probably just in a new form. Like someone was saying at the beginning of the show. Who was it was saying that? Oh, woke. So woke points was talking about the small nuclear reactors. So I think that's right. I think that's where things are headed. But we're still 1 to 3 years out before those things become mainstream at best. Maybe not a year, maybe 9 months to 3 years, something like that. In the meantime, natural gas is that filler. Does something happen that it allows this natural gas to rally, okay? And what's a big move in it, right? Maybe it doesn't go back up and retest these highs at $10 per MMBTU. But the point is maybe it's, you know, just a nice move up into this area or something like that, right? This is a decent place to look. It makes, there's a lot. If you like the fundamentals, okay, of natural gas, I think they're there. Right? If you like the technicals, I think they're there, okay? If you want to manage the risk, okay, we've got this harmonic structure, okay? You know, can it climb back above this pink shaded zone? If it can, then we can start to manage risk against this pink shaded zone, okay? So we have a lot of things here. We have fundamentals seem to be in place, right? It's a good filler for the next 1 to 5 to 10 years, right? It's probably going to come in demand. We got data centers absorbing energy. Natural gas seems to fit the bill for that. You know, we've got nuclear coming online, natural gas, a great filler until that point. We've got the technical longer term, right, going all the way back to 1990. We're at a safe level where the market has found kind of a equilibrium, okay? And we now have this harmonic structure. Again, it's not, you know, you can say, well, yeah, and look, this was a spot to sell, right? So, you know, you could sell it once it broke below and retested here. And here you could sell natural gas against that, okay? But again, if that level gives way, and we get above this harmonic structure, maybe we get another harmonic structure, right? Maybe we get other things, but we can start looking at technicals. But for now, this is a decent level. It makes total sense, right? It's right there at the old equilibrium point, and we have this ability to manage risk against this harmonic structure, even though this thing is getting older, right? And it's kind of just hanging out there. It still is functional, right? There's still, it responded nicely to this harmonic structure. So I still wouldn't be afraid to lean against that pink shaded zone if it can climb back up into there and start climbing above it. All right, let's take a look at this one because I wanted to do this. This is RBOB gas, and this will go back to Trumpet's question. Okay, so what I had a couple notes on this. I wanted to, okay, so what is RBOB gas? Let me go back in here. I've got a couple notes on this too. Let me pull this up. So we've got, hopefully I can find them. So RBOB gas is, I want to get what it stands for here. So, because I always forget. Boy, I apologize for this. Okay, here we go. All right, here are my notes. Okay, so you can look this up. So RBOB gas it's a benchmark for reformulated gasoline in a blend stock that, let me just leave the chart up as I go through this. it serves as a base, okay, for the region's gasoline supply. So again, New York, East Coast based, right? Which is again, it sets a lot of the prices, okay, and it's a futures contract, okay, and so it represents the U.S. Atlantic Coast gasoline market. So RBOB stands for reformulated blend stock for oxygenate blending, okay, and it's the unfinished gasoline, okay, that is later blended with ethanol at truck racks to create the final E10, which you'll see all over the gas pumps, E10, right? Ethanol 10% gasoline product. So Trumpet continued. She asked a great question last week about corn and ethanol. And I came back and missed it on Monday, but answered it yesterday on Tuesday. And then she asked another great question, follow-up question. Well, wouldn't that be bad for corn, right? Since corn, and here's the composition of corn for ethanol, right? So 40% of corn goes toward energy, right? Toward ethanol. 40% goes toward feedstock, right? Feeding animals and things like that. And 15 to 20% goes toward human consumption. Okay, it goes toward corn syrup, which isn't good for us, right? But it also goes for cereals and things like that, right? There's these different things. So from the energy perspective, Trumpet's good point was, well, wait a minute, wouldn't crude oil inventories building over the next couple years be negative on that particular component, on the 40% that goes toward energy? Wouldn't it be negative for that? And the question is yes. That's a great question. So we have to keep that in mind. The key, though, is on corn. Is corn depressed enough that that's already sort of built into it? Okay. We're at a safe level in this corn. Maybe we'll pull that chart up real quickly. But what I wanted to talk about on this is, with this ethanol, okay, and the way that this works is, okay, so the RBOB is the not finished gasoline that you okay, so RBOB is not the finished gasoline you pump into your car. It's an unfinished component that is blended with the oxygenate, typically ethanol, to create this finished gasoline, okay? And the reason they do this is supposedly, it meets more EPA standards. Again, who knows, right? Reducing smog-forming pollutants and things like that, okay? Again, maybe not. I don't know. I tend to doubt these things just because I know how skewed they are, but maybe so, right? Maybe there's let's give it a little bit of the benefit of the doubt that maybe it does do that, but generally speaking, I would say it's probably a scam. Okay, so RBOB is a heavily traded futures contract on the exchange of the CME and the ICE, okay? And the contract's like 42,000 gallons, all right? So I'm not recommending people trade the RBOB gas per se, but I think what we can do is we can watch this, all right? So to answer Trumpet's question in greater detail, if they're taking ethanol from corn and they're going to formulate it with this RBOB gas, we can now use this RBOB gas, okay, to see that component, all right, of what she's talking about. So again, we don't want to take corn and the ethanol and compare it to crude oil because it's not the gasoline we use, right? Gasoline we use is another product, right, that comes out of this carbon chain. We want to use this RBOB gas to measure it against, right? So what I'm trying to say here is if we're going to think about it at that level of detail, which I think is brilliant, we want to use this RBOB gas, okay, and the fact that ethanol gets blended with this to come up with the final product. So with that picture in place, I think we can look at corn from a human consumption perspective. We can look at it from a feedstock perspective, feeding agricultural needs, animals, so forth. And we can look at it from the energy production side, which is the ethanol. And this is the better place to think about is in the RBOB gas, not crude oil. Okay, so we want to separate those two because RBOB gas can go up and crude oil can go sideways. RBOB gas can go down, crude oil can go sideways, right? They're not 100% correlated, even though they do have carbon as their base, and they're just different forms of the carbon chain, so forth. This is a little different, okay? So that hopefully answers that question a little bit more. All right, so let's take a look at this on a weekly, right? You can see it's sort of compressed. It's, kind of tight in there. Again, we're just going to use this as a reference point for that. I just wanted to introduce and explain that. And let's look at it on a daily. It's pretty depressed, okay? So the takeaway on this is I could see RBOB gas making a move, this range would not surprise me at all. So it could be a lot of sideways movement in this. I don't see a massive energy build. Like back in here, you can see this was a nice big energy build, right? And, we see this big move here from March of 2020, which is pretty interesting. I never thought about it in this perspective. I'll have to think about this a little bit because now I'm starting to see some things that catch my curiosity. This would have been about the time President Trump was coming out of office, and we see the huge inflation spike, right? And this plays a big role in that, right? The gasoline component. So this is pretty fascinating. We need to do a little more work on that. Okay, so I'm going to leave that alone. Let's take a quick look at this corn and just do. So hopefully that makes sense, Trumpet. I'll look back in the thing to see. So here's our big picture on the corn. Okay, why do we care about this? Because corn's not correlated. So if the stock market's potentially topping, if the stock market's potentially going to go sideways, this is a diversified asset, right? Corn's different than a lot of things. And we don't want diversification, right? We want diversification. So we don't want to add things to make things worse. We want to add things to make things better. And I think this has the potential to do that because it's depressed, right? It's at the bottom end of this trend channel. I mean, how much lower can it go before we start getting into these big technical levels down in here like this, right? You look across here, there's a lot of volume in here where there's a lot of memory, right? That's what this means. There's a lot of memory. So you get these big traders who say, boy, do I really want to start pushing corn lower than that? Lower than $3 a bushel? Man, that's dangerous, and that's about where that sits, $3 a bushel. And if you think about this, we've retested this a couple times right in here. You can see this is kind of a messy way of doing it, but let me just show this. You can see we've sort of built a little bit of support on this down in here a couple times, right? Like in this area, okay, in this area, corn's kind of bounced off that. Corn's kind of held that area. And then we have this upward. So that's just off the $3 a bushel level, okay? That's a big psychological level, $3 a bushel, right? Sometimes these psychological levels matter. Why is that? Because again, if everybody sold it and they've sold it down into these depressed levels, at some point the last seller is sold, and what's left? Just buyers, right? Are the sellers just going to keep selling and selling and selling and selling it into the ground? Some of this stuff is just flows, right? Supply and demand, and just psychological too, and things just happen. Cycles just occur, right? Sometimes you can't explain everything. But the point is, how much more depressed can corn get? Okay. And and again, I just wanted to make sure that we separate it away from crude oil. So we don't taint it. We don't taint corn energy side to crude oil. We taint it. We lean it toward where it belongs better, which is the RBOB gas. Okay. So that's the corn chart. And what else? I think that's it on this. Let's take a quick look at silver. So here's silver. Again, we had this 37.93. It's the white dashed line. That was our target. We've rolled contracts a couple times. You can see it did a nice job of hitting it right there. Came back, kind of blew back down through it. It spent a little time, but then it retested it fairly nicely right in here. Okay, and then it's been up and away ever since. And if we look at this longer term, we have, maybe I can't look at it longer term right now. I don't know if I have that chart easily available. Yeah, we'll skip that. The point is we've got these targets at 44, 43 to 45, okay, and we hit 43. So basically hit the bottom end of that target. 43 to 45 is that range that wouldn't be surprised to see it get up into there. Right now is a decent pullback. If someone's looking at it, right, you can see it's pulled back to the trend. So this is a decent place if someone's looking to buy. It's low risk. You can manage the risk. It's not low risk. It's just you can manage the risk. Again, spends much time below the black moving average. It's a decent place to say, something's not right here. You know what I mean? So again, we're looking for those pullbacks. When it looks a little scary, that's when you got to buy. When it feels really good, you probably need to take some off the table. All right. And then there was some. Oh man, we got one more thing to cover here. So we're running late. We're running long. All right. Okay. I just want to cover this quickly. Let me see what I can do here. Okay. I think I can wrap this up pretty quickly. All right. So TikTok. All right. Let me come back out of here. TikTok. Let me go to this. I can just make sure we get through all of our headlines. I'm probably going to mess that up. I'll just leave it alone. We'll just talk about this. There isn't much left. Okay, so TikTok. Scott Bessent was trying to strike a talk between President Trump and President Xi. Okay, a meeting, potentially October, November timeframe. They've got a phone call scheduled for later this week. Right, that's the big thing, is to get those two talking. Okay, I don't think they've talked much. Definitely not about the things that they need to. And I think this is part of the delay tactic on the U.S. But I think the key is to keep China at the table, right? Because there's a lot of things that could turn hostile pretty quickly, right? We see China siding with Russia. We see China siding with India. We see the oil, coming out of Russia into India. We see the oil coming out of Russia into China. And we've got lots of potential conflicts here in terms of bigger picture players in the world. And so I think the key is to make sure we stay at the table, keep talking. Okay, I think that's objective number one, and I think that's been achieved. One of the other things that was kind of a low-hanging fruit deal was this TikTok thing. Okay, so TikTok, what is it? Obviously a social media platform. I've never used it. I don't know much about it from a functionality standpoint, but what I do understand is it's a social media platform that is like all these other things, right? It's got its addiction component to it. Somebody watches a video, and then what happens? It rolls to another one, and they watch another one, they watch another one, they watch another one, right? And this is how you can lead people down, toward violent things and so forth, right? So, escalation, and you know what I mean, right? I don't think I need to explain. As we've been through all this stuff the last week or two, I think you guys get all that, right? So here's the thing. ByteDance currently was the owner of 100% of TikTok, okay? ByteDance ownership is now going to fall to 20%, right? The question is, we don't know how the other 80% is broken up, but we do know who the players are. We know that it's Oracle, Larry Ellison, okay? We know that it's Andreessen Horowitz, which is a private equity firm, venture capital firm, okay? We know that it's Silver Lake Partners, okay? Again, all these dudes are sketchy. These are all sketchy outfits, right? Oracle, Larry Ellison. What's going on there? Larry Ellison just surpassed Elon Musk, or they're in a tug of war for who's the richest guy in the world, okay? He runs Oracle. Oracle's a database system that's, like Microsoft SQL, but it's a powerhouse. And what do? You need to store this TikTok data on something like Oracle. And when you do that, you get access to the algorithm that then feeds that escalation of videos, right? So you can propagandize pretty quickly when you have this stuff, right? You control the algorithm, right? That's what's going to happen is Oracle's going to be responsible, as far as I can tell, for that algorithm. All right. Then you get Andreessen Horowitz. We talked about them yesterday, right? With JD Vance, right? Again, they came in toward the end, right, in the Ohio Senate campaign race, and they injected money in there, okay, along with Peter Thiel, $15 million by Peter Thiel, undisclosed amounts by Andreessen Horowitz, and so forth, okay? Again, technocracy, right? Silver Lake. Silver Lake's run by a couple guys, Egon Durbin and Greg Mondre, okay? But it was originally founded by this guy, James Davidson, Glenn Hutchins, okay? You may know that name if you watch the financial space. These are some shady dudes that, in my opinion, I've watched them for a long time. These are some shady dudes. Roger McNamee, right? He's the guy that basically did the whole scam, right? He's the guy that got Bono of U2 into Facebook and these other things early on, okay? The venture capital guy, right? Private equity guy. Not only that, he was part of this one, right, thing where literally, it was supposed to be giving money back to South Africa and all these places Bono was promoting. In the end, it was really just them stripping money off of it. And like 1% went back to the people. So again, it was a sham. And Roger McNamee was part of this. So these guys aren't great actors. You could go on for hours on these guys. The point is, this deal will allow the American owners to license the algorithms and videos that you see next when you're watching TikTok, or your kids or your neighbor's kids or whatever, okay? And it matters because it matters, right, with Charlie Kirk, right? The escalation of violence, the escalation of the stuff is a concern, okay? So who else is Larry Ellison, right? His son just bought Paramount not that long ago, okay? His son is now in a takeover of Warner Brothers, right, by Paramount. So they're going to usurp Warner Brothers under this Paramount window. And again, Ellison's operation is up to something here, okay? There's a lot of content now being controlled by the two wealthiest guys in the world, Musk and Ellison, and the second most powerful political figure in the world, which is JD Vance, his ties to Peter Thiel and their ties back to Rumble, okay? So again, one thing we should be asking ourselves right now is, how did Reddit go from a libertarian and huge Trump following to a cesspool of extremist polarization idiots who laugh at Charlie Kirk, okay, and laugh at us, right? And is it foreign operators? Is it NGOs? Is it big money? Is it this VC deal? Is it players like Oracle, right? These are the things we need to ask ourselves. So with that, I think that covers everything. I'm going to look back here real quick and see if there's any questions. So we've got... wow, good activity in here. Thanks, guys. I appreciate that. I appreciate all the content. Okay, Geo Rich, I'd like to see the April sell-off on that chart as a comparison. If you can put in there, Geo Rich, which chart, I've kind of lost touch with where that time was and things. I will. I'll come back and talk about that tomorrow. If you can specify what you mean by that, I've just kind of lost touch with what you mean when you say on that chart. If you can just specify what that chart means. Okay, then we have the media needs taken down. Yeah. Okay, then Trumpet, do you think that box between 2020 and 25 on the RBOB chart have anything to do with the Biden pullback on gas and eating up your reserves? Let me think about that. Let me think. That's a good question. Good follow-up question. Let me think about that. We'll come back and talk about that. I can't believe people use TikTok. We have learned nothing. Yep. Okay, Filippo, what about gold? Yeah, gold's ripping. So it just hit a 2618 extension. All right. And the look, gold could rip. I mean, it's on a march to 5,000 potentially. Okay. The problem is we could see a 5 to 10 to 15 to 20% pullback at any given time, and it could be very violent. All right. And again, it could create a lot of fear where people, again, the weak hands start dumping gold, or what we call puking it. Right. So basically, they get in. And then now they start dumping it, right? Because they get scared because something in the media changes and they see wait, I just piled into all this gold and now it's down 10 or 15%. Okay. So we could see a correction at any given time. All right. And what would that mean to silver, right? Silver might hold up better than gold. All right. What's a 5% correction in silver? $1.50, something like that. Not a big deal. 10%, $3. Okay. So now back down to 40, 39, 38, 37, something like that. Gold could see 10 to 15%, which would be, 37, 370, $400 sell off, maybe more, maybe even back to 3,000, right? Big psychological level. Who's been piling into gold? Who's been driving the central banks, right? We got a lot of central banks meeting this week. We got a lot of exposure of different things going on in the world. Things can change, right? I don't have all the answers. I don't know. Look, I'm a fan of gold. Again, back in 2001, right? In 1998 to 2001, I was pounding the table on buying gold, and people would just laugh and laugh and laugh and say, gold's done, gold's useless, gold doesn't do anything, it doesn't produce any returns, right? It doesn't do anything. And really following 9/11, gold just, started its march up. And then I talked about, people that I saw come in when gold got to extremes. A guy lost $500,000 in 3 days. I talked about that the other day. So I've seen these things happen with gold. The tides can turn very quickly on this stuff, right? And people will just panic, okay? And they'll dump stuff like crazy. The weak hands, right? We don't want to be that, right? Part of the key of that is being patient, right? But being patient with intention, right? Again, you can't just be patient, never do anything, but you have to be patient with intention. Like, we want to buy gold. We just want to buy it when everybody else is dumping it, right? I mean, that's just the way it works. I mean, I don't want to participate in that, right? I don't want to be part of the herd getting run out, you know what I mean? And then say, oh, well, I know better than that, right? I've been burned by this before. I've learned the hard way. So that's what I'm thinking with gold, right? I'd rather participate in silver. Why is that? The gold silver ratio is really high, over 100 ounces of silver to buy an ounce of gold. So if you're going to play that game, you can probably weather the storm a little bit better in silver. Maybe wait to buy the gold, right? Maybe look at other alternatives. Maybe look at other things, right? There's other ways we can do this. And if you keep asking the question, I'll get into what these other ways are, right? It's just a lot of it's going to be driven by your question. So if you guys have, like Trumpette, she asks a great question, we try to answer it. She asks a great question, we try to answer it. I learn too. Like, I love her questions because I'm learning as well. So, so if you have the questions, we'll try to go down that pathway. All right. So you guys get kind of the control a little bit, the steering wheel and the shifter and, and the gas pedal and the brake. At this point in time, because again, obviously our audience isn't what it once was. And so then you're answering a lot of questions and you just have to let some things go by. But right now you get to ask the questions and I'm more than willing to try to answer them because I'm learning too. I love this, right? It's great. So anyway, so hopefully that does it for the day. Watch gold today. What happens in the part of this Federal Reserve? We'll come back and talk about that tomorrow. Again, we'll probably talk about it on Friday with Commodity Day. And with that, have a blessed day, everyone. Check out the Fed. Let's see what happens today. It should be interesting. Do we get a lot of fireworks or what? I don't know. But have a blessed day, everyone, and we'll catch you tomorrow. Thanks.